Hi everyone, K Kim here. Today is March 2nd, 2018, Friday. Hope you guys had good week trading this week so far. Welcome to the market update. Again, my name is K Kim with the Traders Club. Today we'll be looking at Spider, IWM Qs, and GLD, and we'll call it a day. Let's follow up with what we've been talking about on the last week's video. I gave you a few levels to watch on the last week's video, which was 269.72 and 264.59. Well, we have broken below all these the fast moving averages yesterday, and then now today we're back at that 100 SMA vicinity. You can see 100 SMA right here. That's where we're at. We got down to the last level we've been talking about at 264.59. So what can we expect going into next week? Let's just what I'm going to do is I wanted to figure out potentially a level for a Fibonacci support here. So what I'm going to do is I'm actually going to do Fibonacci measuring here to here. And you can see that 50% retracement is coinciding with the 100 SMA, as you can see right there. So that's the level that we are finding support today. As far as the candlestick pattern is concerned, well, market should be open under 20-30 minutes. So I'm not sure exactly how it's going to finalize this candle here. But let's say if we're to close right now and look something like that, that's what we call bullish counter attack. So it gapped down this morning and then closes near the previous day's low or close, right? Previous day's close, not low, previous day's close. That's a bullish counter attack. Again, like many of these candlestick analysis, we need to see a follow through. So let's see if you can see the follow through. See if you can see a follow through. If not, you can see right now we got 100 SMA here coinciding with the 50% retracement. Also we got a 10 and the 50 and the 20. They're all kind of start to decline now. So what I'm thinking is in the intraday perspective, next Monday or Tuesday is probably going to try to get up, and then some of these moving averages could act as kind of a minor term, micro term, intraday resistance, and we may see some battleground in that vicinity. So if we do lose 265, next level will be 262. And like I said on last week's video, the worst case scenario is this thing coming right back down to retest the lows, the early February lows, and retest at 200 SMA. And I am open-minded for that. But for now, and we'll follow up on that on next week's video, for now it looks like the 50% is holding. Let's see if we see a follow through next week. Keep that in mind. We are still, we do have these higher highs, but we have, and so right now what we see is that we can see potentially if this thing continues higher from here, something like that, we can categorize this as some kind of a higher low. But in the micro term, we do have that lower low. But we don't know if this is a lower low until we see something like this. If we see something like that, then definitely that's a lower low. Or are we going to do something like that? If we see something like that, then we can look at this as an intermediate minor term higher low. So at this point, it's tough to say, what the minor term trend is going to be. Obviously, these minor term sentiment can change in matter of hours, matter of days. But I think 50% retracement is an important level. If we can able to hold that, I think there's a good chance we'll get up here. But we have to see how it's going to deal with these fast moving averages that are declining now. So that's the level to watch next week. Quickly, IWM. So IWM, I gave you these levels last week. So obviously this thing actually came down to the last level, which is a 149.09. So let's remove these lines, and then let's redraw the fib from here to here. So use that high, this low, and you can see IWM also came down to 50% retracement. That's what we're seeing, bullish engulfing candle. Actually, Russell is looking much stronger today with the 1.68% gain today. So bullish engulfing is obviously much stronger candle pattern versus bullish counterattack that we just talked about on Spider. So let's see if we can see a follow through. If I actually go to line chart here, this actually looks like it's lining up with the prior resistance here, a new support. So let's see if that becomes a kind of a size of a higher low. So we don't know it's going to be a higher low until it makes a new high, right? Like if we don't know if this is going to be a lower low until this makes new low. So we're kind of in between, kind of seeing what's gonna happen this coming week. But that 50% retracement acting as support, we do see that, you know, that high wave doji. A lot of times the high wave doji does act as some kind of a reversal sign if we do see a follow through. So if we look at kind of a 3-day pattern here, right here, that also can be looked at or can be categorized as bullish morning star reversal with bullish engulfing candle there. Again, it needs to be confirmed by closing above about 153.61, and then for this trend to continue higher, it needs to close about 155, 156. Let's go to the Qs. Well, the Qs is actually the most stronger or strongest looking chart compared to Spider IWM, because you can see in Spider we're well below these fast moving averages, and same with the IWM. Well, let's see where IWM is today. Yeah, IWM today we're now staying above these fast moving averages, but keep that in mind, IWM is near 100 SMA. Or we're just finding, or we're in that vicinity, while the Spider found support at the 100 at the lows, and in the Qs we haven't touched 100 yet. So a much more bullish connotation here we talked about. So instead, it only retests the first level we talked about last week, which is 163. That's a level coinciding with the 50 MA and 20 MA there. 10 MA is right above it. So if I just adjust this just a little bit right here, then you can see we actually found support at the first level of FIB, which is a prior resistance, new support. Actually, the NASDAQ actually looked much more like this could potentially be kind of that distinctive or definitive higher low in the minor term. So you can see we made a move, comes down, kind of retest that level, and then possibly going higher there. So, but again, like we need to see, and this also looks like a bullish piercing, right? This is more like a bullish piercing candlestick pattern. What's the difference with the bullish piercing and bullish counterattack? Well, counterattack, actually now this is starting to look bullish piercing. So piercing, here, there's a good book on it if you want to learn more about Japanese candlesticks. Japanese candlestick, something, I forgot the title, but if you just put Japanese candlestick, written by Steve Neeson. But keep that in mind, Japanese candlestick study, it is only good for a minor to micro term analysis. It really doesn't, you really want to learn how to gauge the overall trend. But it helps to see, if you understand the overall trend, it helps to see the minor to micro term perspective studying these candlesticks. So basically now this is starting to look like a bullish piercing because it's piercing 50% of previous day's body. So this is more like a bullish piercing, right? It gapped down and then it closes near 50% of its previous day's body. But let's say if this thing stayed around the close, that's what you call bullish counterattack. So obviously bullish piercing is a little bit stronger than bullish counterattack. The strongest of all though is bullish engulfing because it engulfs completely of previous day's candle. So you got some of these piercings going on here, and as I record this video, market is closing. I got 15 more minutes to go and these are starting to move here. So we got piercing on the Qs there. So let's see how that plays out. And if this thing does see a higher high and then higher low and something like that, then we can see that the trend is continuing to the upside and we can able to draw some kind of a bullish support line there. One last one, let you guys go. GLD. So I threw some FIB there. as you can see, I think this fib has been there since I've done my last analysis on GLD. So from here to there, guess where it came down to the 50% prior resistance, new support, 50% retracement is there, coinciding with the 100 SMA. 100 SMA was residing. Keep that in mind. We made a new low right there. This is what happens in the market, kind of traps everybody out. A lot of short-term, weak hands are going to freak out, and then the market starts to reverse back up here. So this is a reason why you don't want to just look at these lows, because a lot of times it'll undercut it and then reverses on you. And the same thing happens to the upside as well. Like right here, you can see right there, like it looks like it's gonna break out. You see right there, and traps everybody, you know. And so that's kind of what it does. You can see right there. So you can see in both direction. It looks like it's going to break out, comes right back down. It looks like it's going to break down, comes right back up. I mean, right there too. It looks like it's going to break down right here, goes right back up. This is a reason why if you're swing trading or day trading, placing your stop just right above or below these pivot levels does not work. Market will take your money and just spit you out. So always want to look at not only minor term perspective, you also want to look at intermediate term, primary term. You want to look at an overall perspective so you don't get faked out like that. But anyway, so we did find some support, that 50% retracement coinciding with the 100 SMA. Still got a lot of work to do. We still have this downtrend there. So I think it needs to get above 120. And ultimately though, GLD does need to get above 130 because it's still bound by this channel. Do you see it? If GLD wants to really fly, really stretch its wings and fly, it needs to get above it, possibly retest it, and then get up here. So still got a lot of work to do, but things are starting to look a little bit better here on GLD. So let's kind of see how that plays out. You guys have a wonderful weekend. Good luck trading next week.